Great. I think we could start. We could make a start. Can everyone hear me? Let's make sure the audio is on. Great. Cool.
Yeah.
Hi, everyone. Welcome to the TG's first webinar and very soon the first of many. I'm your host, Arthur, and in this episode, we will be talking about the lending landscape in MENA, the problems, the opportunities, and where you fit amongst all of this. Just to give some context, joining me today is our first guest, Matt Broom, our in-house lending expert. He'll be discussing and sharing some foresight to the lending landscape in the future. If any of you amongst the audience have any questions, please don't hesitate to post them on the chat. We do have a Q&A session at the end, and we will try to get to as many questions as possible. Also, wanted to add that this session is being recorded, and we will share the recording later. Before we begin, I also wanted to give you all a little background on Tarab Gateway. We are a fintech that supports open banking initiatives across the MENA region, especially in Bahrain and in KSA for the past 5 years, working towards the kingdom goals. And as a result, we are seeing the ever-closing ties between lending and open banking. And we just want to bring you on this journey together. So let's begin. Matt, why don't you introduce yourself?
Thanks, Arthur. Thanks for having me on. Thanks, everybody, for tuning in. So, hi, everybody. My name is Matt Broom. I've been working in the credit industry for around about 17 years now. Back in the UK, I worked with high street banks, retail lenders, and most recently, credit bureaus as well. In the last sort of 4 to 5 years that I was working at credit bureaus, I was working with open banking data. So I've been able to see the kind of power of that data, the sort of power that it has in terms of helping credit decisions, that sort of thing, supporting lending. And yeah, really excited to see that technology, that initiative emerging in this part of the world, and keen to see what it can do here as well.
Yeah, thanks, Matt. I definitely have to agree. The speed of the integration and the transformation in the region for open banking has definitely accelerated, and I got to see that as well. I used to work in fintech in London as well, and definitely understood the significance when we started adopting open banking. You know, at Monzo, our engagement and adoption rates skyrocketed, and this trend isn't going to stop anytime soon. Like you and I, some people in our audience may be new to the region, and some naturally will be local, so do bear with us. But Matt, I'd like you to paint us a picture of what the current lending landscape looks like, and what you foresee sort of how things will change when open banking is introduced.
Yeah, sure. So yeah, I'm relatively new. I actually moved to Dubai, been there for about 5 months, and I'm currently in Saudi Arabia. So part of my role is to speak to clients, so banks, fintechs, other lending institutions, to understand the sort of challenges that they're facing, and then talk to them about how open banking, particular open banking via Tarab Gateway and the services that we provide, how we can address that. And from conversations with them, there are some sort of reoccurring themes that keep coming up. So it's around sort of data availability. So how do you market, and how do you sell products to the widest possible market? How do you maximize the data that you're ingesting? There's challenges in terms of application processes around some processes in the likes of Bahrain, for example, are very manual. Maybe in Saudi, there's requirements for employment salary letters, confirmation of employment letters, lots of manual processes that are required to support an application process, which ultimately makes it a very long-winded application process, which is difficult for consumers and difficult for lenders. So yeah, open banking, as that sort of grows and grows in the region, that can only improve the processes both for consumers and lenders alike. Yeah, it's probably worth, Arthur, you just giving a quick rundown, a quick introduction into what open banking is and the roles that APIs play.
Yeah, you're definitely right, Matt. I mean, similar to sort of what you said, right? Open banking, it enables the individual to have their own say, their own financial data, and that allows them to give and choose and give secure access to any regulated third parties to view or action. And when I say action, they're more the likes of payments, of transferring funds to and from. And with TG, we facilitate this process by providing secure APIs, a bit like a lock and key mechanism between banks and third parties, so that everyone in the chain, no matter whether you are the end user or the individual, the banks, the central banks, or the third-party startup, for example, can be rest assured that the speed and security of accessing the data is of quality. Now, one thing about open banking as well, to be clear, is when we mentioned about data set, majority of the time we are talking about the account and subsequently transaction data. So when I say transaction data, this is down to the transactional level that you and I will see in our bank statements, basically. But it is worth noting that each regulators are also looking to expand the data set being offered so that in the future we can maybe see more, for an example, like contact details being made available, so that can enhance like verification to prevent fraud. But more importantly, for the beauty of open banking is that the data set is standardized, and that makes it easy to understand for all parties. And in this case, what Matt is going to talk about is definitely how it makes the lending journey much simpler. But one other thing I want to say about is the open banking is the future, right? I think it's important to know what it is so that we could use to its fullest potential. But one of the things we understand when we're in the UK and Europe, for example, we know there's loads of buzzwords, and at TG, actually, just want to do a quick shout out, is that we've also written a blog with glossaries of all those technical terms. And so we've done it so that we could break it down into digestible chunks. So I'll leave the link in the chat box or the comment box below so that you guys could access it at your own time, but it definitely helps unpack some of the complexities and understand to the fullest what it means. But keeping back on topic, Matt, I'm going to ask you a question. With what we're talking about with open banking and in the lending space, the success of new initiatives are always about the adoption by the people, right? And I think we're seeing a change in consumer behaviors recently, which I do think supports open banking lending use cases. I was wondering if you can tell us something about that as well.
Yeah, absolutely. So I think we've seen this trend over recent years. That trend is that people are more and more comfortable in the digital space, so doing everything online. That trend was happening sort of 3, 4, 5, even longer years ago, but it was particularly accelerated during the pandemic. So when I was working at one of the credit reference agencies in the UK, we had access to open banking data, so transaction data from customers during the pandemic. And it was quite interesting seeing the changes and shifts in consumer spending. So there were some fairly obvious ones. So while everyone was in lockdown, they were stuck at home, so people weren't traveling to work. So you would see commute spending, you'd see petrol spending pretty much dropping to zero. Some people were saving money because they weren't going out for meals anymore. They were, again, just stuck at home. Because people were stuck at home, they were tending to, they got bored, so they were looking for other things to do. So there were upticks in things like gaming transactions, and we saw lots of people becoming more and more comfortable shopping online. So not just Amazon, but doing grocery shopping, all that sort of stuff. So yeah, the pandemic really kind of accelerated and really ramped up that trend. Now that the pandemic is thankfully over, we haven't seen a return back to the before time. So everybody remains in a much more comfortable space when online. Everything's done much more digitally, and that's kind of been reflected in what consumers are looking for. So they're looking for fast, speedy decisions in terms of the products that they're looking for, in terms of the kind of borrowing that they're making as well. If you're shopping online, you tend to be using a bank card. If you're using credit, maybe you're using a credit card. And then obviously we've seen the huge spike in buy now, pay later as well. So yeah, lots going on, all driven by that kind of digitization. And yeah, that represents a perfect setup for open banking to flourish.
Yeah, I completely agree. And definitely, I think we can sum it up to the audience that we're definitely seeing digitalization. Another thing you mentioned about Matt as well is the changes of trend. And, from the data set that we have as well, we're definitely seeing that. And it's proven evident that, there's an increasing amount of usage from cash to card. And one of the things we're seeing is actually the increasing number of transfers to wallets and credit card accounts. And this is taking around 49% of all our transactions. And just to give the audience a bit of perspective, this is compared to the only 2% of cash withdrawals that we're seeing, right? So this highlights the importance of the change, the shift of consumer behavior to digitalization. But one of the things I want to highlight as well with open banking that benefits is the increasing visibility of what is subsequently spent on, right? So if you imagine with cash, once it's withdrawn to a lender, it's almost like a black box because it's not clear what the amount would be spent upon. And as a result, it's hard to infer, for an example, what that person is like, and what do they like to spend, how is it like, which Matt, I'm sure you'll talk on a little bit as well, right? The black box theory itself. Whereas with digitized payments, right, with online payment and people getting more comfortable, it's a bit clearer, and as a result, we can then see and understand what that subsequent fund is used for. In this case, we're definitely seeing our next two highest categories for shopping and eating out being our major category spend. But one of the things that I want to add, which is very interesting in the data that we're seeing as well, is the behavior in Saudi Arabia, in particular, the age category. We are seeing that they have a very young population, unlike what we're sort of from in the UK and Europe. Does that lead to a difference in terms of consumer behavior?
Yeah, so I would suggest that the trends that I've just talked about are probably more extreme for younger consumers. So in Saudi, I think around about 60% of people in Saudi are 30 or below. So as you said, it's a very young population. In terms of that behavior, so they're much more comfortable online. So yeah, again, just a more extreme version of what I've just touched upon. Younger people are much more comfortable sort of sharing data online. It's the norm as far as they're concerned. So think about the kind of terms and conditions that you have to click accept to with Apple, numerous other service providers. People are very comfortable sort of sharing that data. And, again, as I touched upon previously, there's a desire for speedy decisions, speedy processes, and things to be easily accessed. So again, that's kind of tailoring and probably should be steering the kind of products that the institutions are offering to those younger consumers.
Yeah,
we see that with the kind of credit that they're using as well. So again, that buy now, pay later, the credit card usage as
Yeah, absolutely agree. You're so right. And I think, the amount of emphasis on credit is quite clear that, credit is definitely for rising. And this does sound like good news for lenders as well, right? But, you also highlighted that, a majority of the workforce is under 30s. So are there any particular challenges that, a younger consumer presents to a lender currently?
Yeah, there's a number of them. Not just younger consumers, but there are challenges that are presented to lenders in the region as a whole, and we'll kind of touch on those. So this one is particularly prudent with young customers, but it's around a limited credit history. So when lenders are making a lending decision, they will look at the past performance of your previous borrowing. And they will use that data, your credit report, to determine whether your future performance is good and whether they should lend you money or not. There is a challenge with younger consumers that potentially they don't actually have any previous credit history. So, what lenders need then is a means to support a decision, but without necessarily having a view of the data via credit bureaus. So there's a challenge there around credit worthiness. For younger customers that are maybe just emerging out of school or university, moving into the world of work, chances are they'll be on the lower end of the scale when it comes to their salary. So there are questions around affordability there. There's a particular concern that the products that you're selling to customers, they need to be able to afford them. There's different ways of working as well. So there are the likes of gig economy workers that might have a fluctuating income. You need to, data sources that are emerging need to be able to deal with that challenge and be able to give lenders that insight into that kind of income pattern. And then some other things, so around kind of brand loyalty, because of the likes of sort of digital marketplaces, word of mouth traveling a lot quicker via social media, etc. consumers are a lot less sticky, so they won't necessarily start with one bank and then do all their business with that bank until they die. There will be sort of shopping all over the place to get the best deals, both in terms of the prices and rates that they pay, but also in terms of the experience as well. That means there's more challenges for lenders to remain competitive. Again, on the manual processing side of things, there's the requirement for documents to support applications. Again, for younger consumers and more for wider consumers as a whole, people want things faster. So manual processes that make the application process sluggish are just not desirable at all. And then the final point, just around, this is particularly again focused with younger consumers, is around financial literacy. So anecdotally, we've been speaking to a few clients in the region. They've mentioned about their younger consumers that maybe have credit cards, they'll run into delinquency, they'll get defaults without really realizing the impact that can have on their finances in the long term. So financial literacy and the ability to kind of teach younger consumers about the impact of how they run their finances is very important and a concern for lenders as well.
Wow, Matt, thank you very much. That is a very long list. To be fair, you know, it sort of proves that it's in a good way to lenders, there's more of a demand. However, at the same time, because of the change in consumer behavior, they're also going to face a fair bit of challenge within the space itself. Now, the question is, do you think open banking can be of help? And, you know, maybe I can join you in a little bit, and how can TG also be there to support as well? But overall, can open banking be of help?
Yes, absolutely. I've seen it in the UK. It will absolutely help in this part of the world as well. So yeah, looking at the thin file customers, for example, back in the UK, working with one of the credit reference agencies, we built a scorecard based on open banking data. So based on transactional data, we would look for particular transactions that indicated either positive or negative behavior. We would use that to ultimately derive a credit score for the customer, and found that just using open banking transaction data as a data source produced a very predictive score. One of the things that kind of help interpret transaction data is the ability to take those transactions and actually categorize them. That gives you even more insight. So maybe this is a good opportunity for you to just sort of touch on the categorization that we have at Abbott.
Yeah, absolutely. So one of the fundamental products that we have actually is called the categorization API. What that means is, if you think about your bank statement again, right, you have, each account will have transactions within them. Now, in most traditional form, you'll sometimes see, you know, a string of text. This is the worst case scenario, where it's completely indiscernible. You cannot tell what it is, to the point where some others, you can sort of guess where those transactions occurred, but you're not too clear. Now, to a lender, because of the volume itself, what they care about isn't precisely about each transactions, or, you know, which shop you've specifically gone to, but overall as a person, you know, what type of categories you've done. As a result, what could they infer you as a person in terms of a risk score, like Matt, you know, you sort of talked about. So with categorization, we've actually have 35 plus category groups and names that we can apply to each transaction itself. So what that does is we can give a very accurate understanding of an individual, let's say within a month or two or even a year's time, what they have done, and as a result, what the category groups, like, you know, how the data we talked about, we see more and more people are doing transfers to wallets or doing more credit card bills, and then afterwards it's shopping and groceries. These are things that allow a lender to quickly take a look and understand you know, a person's data, and then afterwards that can be fed into the decision engine, which you know, Matt, you're going to talk about, and overall make the process a lot faster. But yeah, the categorization thing allows us to make transactions clearer. So yeah, thanks for the opportunity, Matt. Anyway, on to you for another solution.
Yeah, sure. Thank you. Yeah, so the next one is probably just around income verification and affordability. So again, what we've seen in the region around data sources for validating a customer's income, there are a number of different sources that can be used to validate a customer's income when they apply for a product. However, in some situations, those data sources can be out of date. perhaps they're understating a customer's income, or they're missing certain aspects of a customer's income. Similarly, using the gig economy example that I mentioned previously, the earnings from a gig economy job may not even be reported with some of the resources that an income is checked against. So there's a real challenge for lenders in terms of, how do I validate the income for some of those customers? How do I make sure that the income data that I'm checking is as bang up to date as possible? And then on the flip side of that, on the other side of income is obviously expenditure. It can be quite difficult for institutions to have a good insight into a customer's expenditure, particularly if the applicant doesn't actually bank with that institution. So open banking transaction data gives a full, holistic and detailed view of expenditure as well. And with those, you can build up a really good idea of the stability and the kind of trajectory of a customer's income and affordability. So yeah, maybe just worth sort of touching on our income verification products as well, Arthur.
Yeah, thanks, Matt. Also, I understood that there may be some lagging. So just in case if anything gets dropped off, please don't hesitate and just pop over the question. I'm more than happy to talk through some of the points that may have been missed. But if not, yeah, just let me know. Anyway, going back on topic itself, regarding income verification, this, like you said, Matt, we're answering the first step of the problem itself, and ultimately we're going to answer all the affordability problems, and ultimately helping and assisting the lenders to get a decision almost in real time. But in this case, with income verification, as you understand, and as you've heard what Matt was talking about, the number of times and the number of barriers for an individual to actually show their income is full of hassle. For example, starting with actually getting statements from the bank. Now, some banks may provide online statements in a PDF format. Some may still require you to go to a bank branch and actually get it in paper form. In other cases, you also will need to go to your employer to request for a employer reference for a salary certificate, for example. Now, aside from the ESG aspect, where paper is environmentally friendly and stuff like that, it also comes towards the more important thing: time, right? Going to the bank, waiting for them to give it to you, going to your employer, to HR, waiting for them to stamp it and issue you a letter. All this could take anything up to, between the fastest within a day or two, to the longest I've heard about 7 to even sometimes 10 days itself. This itself presents a huge barrier to the applicants alike, and also to the lender. So with income verification, given that your income has been your salary has been regularly paid into your bank account, and also given that the bank is so secure, it can't be tampered with, the data you're taking from the bank, with your permission, to give to the lender is sufficient evidence to showcase that of your salary and your income status as well. So hopefully what we could do, and in Bahrain, we are currently helping some lenders do that, is to provide them the income straight away through our income verification API, and give them instant access to that data set as well. And hopefully many more to come with affordability, but in terms of income verification, that's what we can do for you guys. Which, Matt, goes back to another solution.
Yep, thank you. So the next one is just around the manual processes. So you've kind of touched on already the consumer side. So they've got to go and get a bank statement, they've got to go get letters from HR, etc. That data then has to be sort of passed over to the lender and processed. Now, a long time ago, 1980s, scorecards were literally physical pieces of paper. The bank manager would sit there opposite a customer, and they would go through, they would ask the customer their job, their earnings, what they did at the weekends, and they would get different credit scores. They would kind of add up the points. You'd end up at a credit score, and there would be a yes/no decision. Clearly, things have moved on a little bit since then on the decisioning side of things, but also things need to move on in terms of the ingestion of data. So where customers are giving bank statements, there is that need for a human being to go through that document and kind of process it. With open banking, not only is the effort removed from the consumer side, but the effort is removed from the lender side as well. With categorization, which you've already touched on, the bank statements can rapidly be ingested, can be interpreted, and that can be fed via APIs into decision engines to make speedy decisions. So the final decision is a lot faster, which means that the lender is a lot more competitive with their overall offering and their customer experience.
Yeah, thank you very much, Matt. I'd also like to touch upon one product that sort of sits fundamental to all the things that you've been mentioning, and that's Connect, don't you think? Yeah?
Yeah, go for it.
Yeah, always happy to. So with Connect, we talked about, you know, the products that are foundational to a lending decision category, income verification, but the entirety that it's based on for how the data is transported from A to B, which is from bank to lender in this case, is our Connect product. What does that mean to, you know, an applicant, or what does that mean to a lender? So for the whole point of open banking is that the data flows easily and securely. And because through its APIs, it's instant. Now with Connect, one of the key things with TG's Connect is that we have the ability of high coverage. That means that we have access to many banks. And what that means is we're not excluding any of your customers or any of the applicants because they bank with a particular provider itself. So all that case means that they have the ability to quickly press a link, select their bank, accept sort of the permission in terms of giving the lender the access to the accounts and transaction details for a certain period of time. And that's it. That's all. As a result, Connect becomes a very foundational product for any open banking or any type of data requests from any lenders or even PFMs, for example, in order to access or help a user to understand their financial day-to-day transactions. So I think, you know, with thin file, manual processes, earnings, I think that pretty much covers a lot of the solutions to the problems you've suggested, Matt. So I'm going to ask this question on behalf of the audience, I believe. So, you know, as a consumer or as a lender, open banking is almost too good to be true because all the benefits that we've just talked about. Now, the key question is, okay, this information is great for me, but where do I start? What do you recommend, Matt?
Okay, well, firstly, just to assure everybody that it is indeed true. So, yeah, don't worry about that. In terms of where to go, I would suggest that you check out the Terabat Gateway website. So I'm sure a link to that will be shared at the end of this webinar. I would suggest going on there just to familiarize yourself with the concept of open banking, just to sort of understand what that entails, if there's any sort of questions outstanding from today's webinar. And then there's also the opportunity to have a look through the products and services that we provide. And of course, then you can sort of reach out to us as well. For the more techie sort of minded members of the audience, I would suggest that they actually have a look at the developer portal. So via the developer portal, they can start reading the documentation around our APIs and the products supported by those APIs. They can also get access to the sandbox area. They'll be able to sort of start having a play with the sandbox data, and again, just familiarize themselves with the data and products that we offer.
That's great, Matt. Thank you very much for that information. Well, also, I'm just conscious of time for Q&A. I'd like to summarize for the audience what we've discussed here today. Ultimately, we are seeing open banking regulations being adopted across the region, which is great. You know, we talked about the shifting behaviors of consumers, you know, how they're yearning for faster and more hassle-free access to financial products, especially lending. You know, we talked about the rich data sets that TG can offer to support the changes of behavior and the challenges sort of Matt talked about in terms of the friction and time-consuming nature of the existing system. And finally, echoing Matt, you know, as a result, please do check out our dev portal and give it a try, and also our website as well. If you do want to keep an eye out for our new products to help transform your business as well, take a look at our blogs. We do keep it up to date with also up and coming trends as well. So I think this concludes, you know, our little chat, our little coffee chat, Matt. Just curious in terms of questions, are we seeing anything on the list? Let me take a look. I think we've got one, don't we? Okay. This is from Astrid. Hi, Astrid. Good morning. Okay, let's read it. Please, I have a problem. How to find solution about online payments, especially when you want to receive payments, for example, in Africa, Cameroon, with PayPal, because I am only pay but not receive. I think this is a very interesting question regarding to open banking. Now, less relevant to lending itself, but I think we could talk a little bit about open banking pay and how that potentially offers a solution. But Matt, where do you recommend we should start?
Maybe just, well, I suppose the first thing to call out is that the regulations for payments, they're present in Bahrain, not in Saudi at the moment. They're expected half two. But in terms of the detail of Astrid's question, I think you're probably best placed for that, Arthur.
Yeah, no worries. I was just thinking, but you're definitely right about the regulations. So I think with Bahrain, payment is definitely something that they are focusing on. So to sort of address everyone's understanding of the regulations as well, both Bahrain and KSA within the MENA region are sort of the first to take approach to open banking. They've taken the first steps to understand sort of read capability. So that is data transfer. So for an example, what Matt and I were talking about, the lending use cases, basically transfers of data, transactions, those are read-only. What that means is we can't really touch, or no one can really touch or action any of your transactions. In terms of pay, that is the next step to open banking. This would enable sort of one-click or ease of access transfers or automated payment. I think a big thing that's coming up is VRP, which would be a great topic for the next webinar. But I think in terms of to answer your questions, Astrid, I think with PayPal, it's slightly outside of open banking in this sense. PayPal, very similar to MasterCard and Visa, they have their own payment railways. So it really depends on more specific cross-border payment solution and what you need. So if you can only pay and not receive, it could depend on the different geographical limitations that exist or different expanse that each of the payment railways have. So it's worth checking out alternative payment solutions, but I think it's worth talking about, where open banking pay comes along, because that's basically bank transfers and to I was trying to say to transfers, it's a low cost. To businesses, it's a lot lower cost, and which is something that's quite interesting. Now, I think there's two more questions as well. Let's quickly hit those. What would be a minimum requirement for a lender to integrate with TG for connect categorizations and income verification? I think I can take that question as well. I think it really depends on a case-by-case basis, but I think fundamentally what it means is you need to have, because we have APIs, we will be able to assist you with majority of the technical capabilities, but it's probably worth having at least some sort of developer capability to actually integrate the open banking services. In terms of regulations as well, such as permits and licenses, I think it really depends on a case-by-case basis. But if you are a lender already, I believe you really should have a license, which as a result means that you could work with a technical service provider. But I would say that is the bend and start. Afterwards, please don't hesitate to reach out to us, and we can definitely discuss what we could do and start working with you as well. We also actually have a sandbox environment, which is within the dev docs. I will post in the chat shortly, that you could access and play and basically test out. We have examples, mock scenarios for you to play with, so you can see how that could be integrated within your system. Hopefully that answers your question. Let's go with the next one. Will open banking data substitute the credit bureau scoring in KSA or GCC? This is a brilliant question. I think, Matt, you should probably take that.
Yeah, it can certainly, I think that there's two different situations. So if we look at a situation where a customer already has credit bureau data, i.e. they are a thick file or a fat file customer, they have previous credit history, open banking data can absolutely supplement it. Again, going back to the Equifax or the Equifax example where we built the credit score using open banking data only, if you cross-tabbed the standard or the traditional credit bureau score with the open banking score, then you could start to identify pockets of troublesome or profitable customers, as you kind of put the two in a table. So for those that have already got bureau data, it can absolutely enhance. And I think it really shines where in the situations where customers have little or no bureau data available. Otherwise, in that situation, typically a lender just would be forced to decline the customer. With open banking and the information that open banking kind of gives to the lender, they can still make a decision. They can make an informed decision and potentially accept a customer where previously they might have been forced to decline them. Whether it will replace it, I think there's probably room for both to exist together, and use each other's data to further enrich decisions.
Thanks. I think that's a great answer, Matt. Let's check if there's any. I think there's just another one that just came in. As lenders scale in the region, do you think open banking regulation differs greatly from country to another in the GCC, or are things pretty much unified? I think we could both answer this question a little bit. I'm happy to give it a start. I think at the moment we could only really judge between the experiences of Bahrain and in KSA. We could speculate where open banking could come out next. For an example, we do hear whispers within the UAE, a central bank, they're looking at it. We also know that, with Kuwait and Qatar are shortly behind. But all this is, of course, speculation until they actually do a proper announcement. But it makes sense given the incentive to better support the individuals and the people within the country itself. But to answer your question specifically, I think ultimately there will be some differing regulations within the open banking spec. As a whole, it should be the same, given that most data sets are standardized. However, in terms of how regular, whether it's optional or mandatory, these things could be subjective. And also one thing I'd like to call out, it really depends on the type of data each of the bank holds. So there's that subjectivity that we have to tend with, but not plugging our own product a little bit. It's why TG is here, because we have the ability to help standardize any of the discrepancies between the banks or the regulations as a result. That's why, for an example, we can operate both within Bahrain and in KSA, and as a result solve that problem for you as well. I think, Matt, do you have anything to add to my answer? Or
Yeah, I mean, so just to touch on the differing sort of open banking regulations. So looking at Saudi, for example, under the KSA specs, there's that requirement for commercial data to be made available via APIs. So there are potentially different uses. Those regulations and the fact that banks are mandated to share their commercial bank account data means that there's a use case for SME as well. So the kind of challenges that I talked about for lenders in the retail space, those similar kind of challenges or parallel challenges exist in the SME lending space as well. And absolutely, open banking, the regulations for open banking data to be shared fully supports those use cases as well. And I think just in terms of regulations as a whole, open banking is a very useful tool for lenders to serve the various regulations that they have to operate under. Again, for example, responsible lending guidelines, we see that there are very prescriptive requirements for banks in the Saudi region, for example, to operate under affordability thresholds, making sure that they're fully assessing a customer's income and expenditure, and open banking absolutely can drive and enhance the decision-making process there.
Yeah, that's a good shout. Let's tackle the next question as well. What is the difference between TG and Lean Technologies in terms of offerings to the fintech? I think this is a great question, and also shows the awareness of the different players in the region as well. Now, of course, let me talk about TG, given that I know it the most. I think with Lean and TG, we're both here to support the open banking initiatives and help the kingdom in Saudi Arabia and other regions like Bahrain and other potential GCC countries to achieve the open banking framework that the central bank wants to achieve. Now, what I believe that TG excels in, particularly especially in lending, which is what we're sort of giving a webinar on, is the data set that we have with TG. And how we talked about our categorization capability. Unlike other companies, our data set is particularly geared towards the MENA or GCC region. What that means, because of the localized data, it's more specific to sort of the specific merchants or specific ways of working that day in, day out people see within GCC. As a result, the insights that we could leverage and provide to a lender is more specific and more accurate, giving you better understanding of the individual. For an example, I'm going to steal this quote from Matt, because of the insights that we could discern from an individual through the affordability, through the income, because we understand sort of how the ways and the banks work. We could easily change, a decision from a no to a yes, or a yes to a better yes, through the understanding of the transactional data. And I believe that's what draws us apart and better support the fintech, especially within the lending space. Matt, anything to add on that?
No, I think you've answered it perfectly there.
Great, thanks. I mean, this is good, guys. Really, really happy with all the questions. All right, let's machine gun this. Do you think credit risk assessment can be done solely based on AISP, open banking, or other data must be collected? Matt, want to take this?
Yeah, so I mean, this kind of ties in with the previous question. So absolutely, it can be used as a standalone data source for assessing creditworthiness of individuals or potentially businesses as well, and also their affordability as well. So yes, absolutely.
Great. How open banking companies will generate revenue? This is a very interesting question. I think in terms of the best way to answer this, I think ultimately it's a given that we're an infrastructure player, we're here to support the fintechs. We're a win-win situation. If you grow, we grow, right? So at the moment with open banking companies, the key commodity, I would say, is the APIs itself, right? We have to use it to maintain and make sure it's secure, and the speed itself. So from that, we would basically charge through the API calls that are being offered. So that will be how, in the lending case specifically, how revenue can be generated. There are other ways that revenue can be generated, but being specific on the lending topic, this would probably one of the ways how it is. Hopefully that answers the question as well. What is the logic between open banking credit scoring? Seems like we're alternating. Matt, I think I'll defer this back to you as well.
Yeah, so I mean, you can build a credit scorecard in a number of different ways. So you can either just do an expert scorecard, or you can use sort of logistic regression to actually sort of go into the real statistical modeling side of things. So typically with a credit bureau type scorecard, you would look at things like the total number of accounts that somebody has, the total utilization that they might have across their borrowing, their worst payment status across accounts, all that sort of stuff. Those would go into a regression modeling sort of assessment, and out of that derives the most predictive characteristics for a scorecard. Those that would be most indicative of whether a customer is going to be good or bad. You would sort of go through that on a stepwise process until eventually you arrived with a scorecard with, let's say, 20 different variables that determined how good or bad an applicant would be. So that would be on the credit bureau side. There's absolutely no reason why attributes can't be built on top of open banking data instead. So, you could potentially look at what's someone's running balance over the last X number of days, how much of their overdraft have they used in any given month. There's all sorts of different characteristics that can be pulled from transaction data versus what you might be able to see on the bureau report. So again, using that same kind of process, you can end up going through that statistical modeling process and arrive at a very powerful scorecard. Obviously, the difference between an open banking scorecard and a credit reference agency scorecard is that the data that feeds into an open banking scorecard is a lot more reactive and up to date. So with a bureau, there can potentially be anything from a 4 to 6 week lag between a bad event happening, i.e. you missing a payment, and that missed payment arriving at the bureau and then being reflected into your scorecard, into your credit score. If we're looking at open banking data and transaction data, anything bad that's happening in transaction data is available as soon as it happens. So we would see that in the transaction data. That data can then be used immediately to drive a shift in a credit score. So yeah, similar kind of approaches, but the differing data sources have different powers.
It's a great response, Matt. Thanks. That was super insightful. I think the next question is something that we've just discussed before this webinar. So I think you can definitely repeat yourself and answer the good question you were telling me. So the question was, do you support SME, for example, retailers, F&B, and open banking in KSA right now?
Yeah, so again, under the KSA specs for open banking, there is a requirement that banks open up the data sharing for commercial accounts. Excuse me. So absolutely, open banking then that data absolutely supports SME decisions as well. So as we talked about, there are particular challenges that lenders in the consumer space face. There are absolutely challenges that lenders in the SME space face as well. In fact, just recently we've been speaking to clients in the region, talking to them about the sort of challenges that they're facing around SME lending. So from the simple accept decline decision, risk profiling, and how much you actually lend to a business, particularly in a new to bank situation or a new business, how do you do that? So absolutely, open banking can answer those challenges in the SME space as well.
That's great, Matt. Just want to clarify that as well. So yeah, it is something that we're looking at to help support. But one of the things to call out as well, we're currently working with the banks to ensure that with the SME accounts, that's being shared accurately and safely. That is still currently undergoing some tests. So as a result, it's coming. But at the moment, it's something that we will look to support as well. I think we've got one more question so far. It's actually two. So thanks, Matt. What do you see as the biggest barriers for entities to start lending based on open banking data right now? Do you want me to take this, or?
If you've got an answer at the tip of your tongue, then go for it.
Cool. I would say in terms for any entity, and I think I'm going to steal a bit of the question from below as well, because the second question is, do you foresee more uptake from new fintech startups or traditional established credit institution when it comes to open banking based lending? So to answer this question, I think we really need to depend on the audience base the lender is trying to target. So at TG, both Matt and I have the fortune to talk to both traditional lenders and startup lenders. The way you want to understand the audience and subsequently, adjust the risk to lend to different groups will require a different type of data set. For an example, like how we're talking about buy now, pay later, or fast instant loans, which are usually lower ticket items but higher volumes. These things require less checks in a sense. So when I say less checks, it means it requires sort of faster approval, and would as a result be posed at a higher risk, but because of the amount is smaller, it's something that they could accept. As a result, on this type of banking data, income verification of course would be your fundamental API to consume, but as a result, once you take a look at some of the historical data like expenditures, it is enough to some to actually address some of the risk profile and to actually provide a lending score, a loan to the applicant itself. However, for an example, I'm of course extrapolating a little bit from the questions, Matt Davis here. it depends. So, for example, if you're a more traditional lender, you may be looking at, let's say, a mortgage or something that may require a larger amount to be borrowed, and as a result, more data points would be required. So, in this case, how Matt Broom was talking about. Was leveraging both open banking data and some of the credit bureau data to give a bigger picture in the meantime, and hopefully with more and more data coming through, open banking would be sufficient. But in this case wise, I'm going to take a stab of my own opinion. I personally think that fintechs are more keen on taking open banking data as a result of sort of the faster access to a particular audience set that they are trying to target. However, I do see traditional credit institutions also catching up and definitely taking that first step of integrating open banking into their lending process as well. And then to say about the biggest barriers, I think it's more internally to address their internal risk management, I think, because open banking is relatively new and, rightly so, to give it a loan requires a fair bit of risk management. So to understand and to trust that, data set and to basically integrate that back into your business model does take some time. So I think the biggest barriers for introducing open banking data is, addressing what does this answer, what type of risk does your open banking data address, and as a result, could this subsequently replace anything, or could this make this process a lot faster? So I think it's more of the knowledge base itself, and also some of the awareness across different entities that would be the biggest barrier. Otherwise, that I think with the technology, it is ready, and I think it is groomed to expand very, very fast. So hopefully this answers your question. Matt, do you think you've got anything else to add to this?
Yeah, so I think one of the key sort of tenets of open banking is that the consumer owns their data. They give consent for that data to be shared, and then for it to be used by lenders or whoever it may be down the line. So without that consent, open banking kind of fails. So I think one of the biggest obstacles is around consumer adoption of that. So how do you kind of nurture that? How do you make sure that that happens? Well, you make the consumer experience as smooth and as easy as possible. So I think the key thing is making sure that customers have a good time with open banking. So the consent journeys are as smooth as possible. The messaging and communication is as clear as possible, so they know what data they are sharing, why that data is being shared, and just give them as full a picture as possible to best encourage the consent to be granted, and then obviously all the benefits from that consent can sort of blossom and grow. So I think winning over the end user is the big challenge, but yeah, absolutely one that we've seen can be beaten. We've seen it in the UK, the growth with the consumers using open banking there. There's absolutely no reason why that same thing can't happen here.
Great, thank you very much, Matt. That was great. Cool. I think that is all the questions we have. Let's give it another minute, see if there's any other questions. If not, I think that was a very enjoyable talk with you, Matt. Thank you for sharing your insights with us.
Thanks for having me.
Thank you very much. Oh, I think there's one more, apparently. Are there? I'm not seeing anything on my side. So. Cool. Otherwise than that, I think we have answered all the questions. Audience, guys, thank you very much for joining our first webinar. We really hope you enjoy this. I believe that later down the line, we'll be sending a little feedback sheet to see how you enjoyed this session. Please provide your honest opinion and we can tailor it to your needs. And if you have any suggestions for the next topic, what you want to hear about open banking or anything particular regarding TG or the region itself, we'd love to invite guests on this webinar to give some of our insights as well. So I really appreciate the time, and thanks everyone for joining. Have a good day, and we'll send the video out shortly. Cheers all.
Thanks everyone. Cheers. Bye now.